record. Okay. Start up. Boom. All right, so if you can see my screen now, can you just put the one on the chat box? Okay, let's start up now. So I'm going. All right, so I'm going to start up now. This is I'm Precious by name, aka PeckyFX. I'm a smart money trader, and I'm going to show you some basic things to watch out for if you want to trade smart money. Although it's an advanced class, but I'm going to make it as simple as possible because we have smart money basic, we have smart money intermediate, and we have smart money advanced. Smart money advanced is the one that you'll be seeing all sort of labeling like SOS. You'll be seeing things like CRS, CRK, all those stuffs. So, but this one you won't be seeing all those labels. All right. Okay. Now, there are just two things I always watch out for if you are trading smart money. Just watch out. Things like this. All right. Just follow this. Change this to red. First one. Second one. Third one. All right. So for the market to move up like this, it has to step on a particular level, then go up again, step on this level. It's the same thing you know in your Forex, so break and retest, so don't get confused. All right. So at this point in the market, something happens. If you've gone through your basic classes, you know that this is just what? Higher high, right? Higher high. If you don't understand market structure, you can't trade smart money. You'll be blowing your account. So you need to have the basics first before you can start trading. All right. So stuff like this. Now, for this market to move up to this point, it needs a step that will enable it to move higher. So most times you can call this break and retest, kind of. But using the smart money concept, it gives you a better entry. So something like this. All right. Let's hold on. All right. So for any time the market wants to move higher, it needs a step for it to move higher. So these points here are my blocks. You can call them other blocks. You can call them anything you want to call it. I call them FU, but these are actually other blocks that have been placed in the market for them to move the market higher. So at this point, I want to see two candles. One candle is doing something. One candle is going the opposite direction like this. Let's assume this is the red candle. Then the next candle, I want to see something like this. At this point, these are what I'm watching out for. The green candle. All right, so something like this. So whenever I see something like this, I'll go back to the chart. I want to check the level where that stuff is formed. It shouldn't just be middle of nowhere. Remember, when you start trading smart money, all the candles will look like smart money. That is where you keep blowing your account. Everything will look like smart money. When you see one candle engulf the other, this is an engulfing candle now. The bullish engulfing. Okay. So something like this. This is what I'm actually watching out for whenever I want to trade smart money. So I want to see this price manipulation, like pushing price down. maybe filling up an imbalance somewhere, then the next candle pushing back up. So I'm just waiting. The next time price comes back to this place is gonna be my step, right? So let me just put it somewhere like it. I didn't arrange it very well, but just understand this concept. Just hold on. All right. So something like this. All right. So whenever the market does something like this and goes up, I want to see the market go up, then come back to this particular block here. Market goes up, comes back to this particular candle here, then continues going up. So these are the things I want to see in the market. All right. Then also, the next thing to watch out for if you're trading smart money, it's when you have equal highs. I know most of you know that one. That's the most common one. You can identify it. When you have equal highs in the market, stocks like this, you have something like this in the market, equal highs in the market. All right. So most times I might see trades like this and I wouldn't want to pick it because my mindset is just that smart money might come and hunt my stop loss. So I always avoid stuff like this. Double tops, I avoid it. These are potential targets. That's why most of the time when you see my markup, you see something like E on top here, which means that what? Market can come here and clear liquidity before dropping down. So at this point, what I'm expecting here most times is for the market to just push up like this. And the next candle does something like this, goes down and then goes this one. So in areas, if you spot something like this on equal highs, okay, this is a smart money play. You see me always box it with a red mark, then my entry point is somewhere here. So this is just the basic idea on how the smart money works. And also double bottom, something like this. It mustn't be double bottom. Most times you can even, do something like the third one, then move it up a little, then crash it down, then bring it back up. All right. So stuff like this, these are what you should watch out for if you want to trade smart money. I'm not saying any other strategy doesn't work, but you just have to watch out for equal lows. I'm scared of equal lows like this. These levels scare me a lot in the market. When I see the market touching this particular place 3 times, then I'm expecting something like this to happen. So this is just the basic. This is the simplest one you can see. Something like this. The market goes down and the next candle comes up. This is the most common one you can see in the market. I will show you that when we go to the chart. Something like this. This is the common one you guys see. All right. So you can spot these ones out easily. But these ones are quite advanced, quite tricky. All right. I'm going to show you that now. So this is just the basic knowledge of basic idea, what you should know about smart money, how they move price, right? When you see equal highs, so expect that the market will go there and grab liquidity, then come down. All right, so let's go to the chart now. AUD card first. All right, AUD card. So you can see something like all right. Look at this chart here before. Okay, well this one is all right. So this one is the most common one. All right. All right, you can see double tops here, right? Double top, what happened? Double top. Okay, what happened here? Smart money came here, right? If you understand what I'm saying, can you just put a 111 on the chat box? If you understand what I'm saying, can you put a 111 on the chat box? All right, all right, all right. Okay. All right, so levels like this, it's very easy to spot smart money. All right, you see, double top, the market comes here. Most people will be like, this market is going to drop at this point. This is a resistance level. Then most people will actually set their buy stops. If market closes above here, the market is going up. Now what you see, smart money goes up, activates buy stops and all that, knocks out people that are already selling. Then what happened? The next thing, the market goes down, right? Okay, now you see this level now. this box I marked here is now my candle of interest. I might not pick this move down here because this has already left me. I don't jump into the market at this point. I will allow the market. Most times I just trade once in a week, but one move gives me a lot of pips instead of just picking 111. So right here, you can see, let me remove this box here. So you can see, okay, you see this candle that went the opposite direction, this blue candle here. On your chart, it can be the buy candle. This is a buy candle. This particular one here, this buy candle that went up, then price couldn't continue going up. Then what happened? Price crashed down. So this candle is my, smart money candle, FU candle, whatever you want to call it. So I will just come here and put a line. Most times you can have 3 entries, but okay, you put it on the week, on the body, week, and the body, then 50%. Those are the 3 entry points if you want to trade smart money. But most times it doesn't really get to, yes, it gets to 50% most times, but I think we have more. So hold on. All right. This is the 50% of this candle. This is the second entry. And your stop loss is just above here. These are your stop losses right here. So, and the minimum you can get trading smart money is 1:4. So this is a total number of 15 pips stop loss times 4 is 60. Something like that. So your take profit with somewhere here. All right. So let's go back to how you can get your sniper points. All right. So identifying this candle 1, did it clear equal highs? Okay, how do you know the 50%? You can just use your fib too, or you can just use your eyes. You know the center of the candle now. You draw your fib like this. Okay. Draw your fib on the candle that went the opposite direction. Your fib, your Fibonacci on the candle that went the opposite direction. Fibonacci, 50%. Well, it's just somewhere here. All right. So this is the 50% of this candle. No, this is not 50%. Sorry. I have my, this 50%. All right. So this is my 50% level here, right here. All right. So you can just use your fib and draw on that particular candle that went the opposite direction. Then 50% is just at the middle of it. Most times I don't use the fib. I just, all right. So remember your first entry point is where? The body and the wick. All right. So this is our first line. Let's remove this 50% for now and this other one. All right. So now this is the line here. This particular one here. Right. So now you wait for the market to come back to that place. Now you can see after the drop, it's going to take time. Most times it can take 1 week. Most times it can take 2 weeks. All right. So now you see, this is our entry point. This is the sniper entry. This is how enter the trade. You can see sniper entry right off that point. Okay, you can see that. You can see the entry here. You can see the line. You can see how price just came there and did what? Rejected. You can see the entry. You can see how accurate. So this is how you get your sniper entry. But it doesn't happen all the time. Like it doesn't just happen in one day. Most times you see how the market is moving. You have to understand market structure most times. So you see the market created equal highs, takes it out, kind of comes back inside again, then goes up, then mitigates off this buy position they had here before this major drop here. So this is your entry point 1. Then also stuffs like this. This one is quite advanced. If you switch to the 4-hour time frame, you're going to see something. Most times the candle becomes clearer when you toggle between the time frames. All right. So hold on, let me just get this done. All right. So right here, we have 2 candles here. 2 candles that went the opposite direction. We have this first one, this one, then we have a little correction here, then this major one. I had 2 entries here, which is this particular one here, entry 1, then this particular one here. Next one is the second entry. This is always my first entry, like before this big move. this candle that actually engulfed this whole candle, this 1-2 candle. So this is my candle of interest, this one and this one, right? This one is quite confusing because looking to the left, you are not seeing anything here. Like, yes, it actually cleared equal lows, but why didn't we use this candle? Okay, why didn't we use this candle? You're going to ask that, but this is quite advanced because there are other things you have to consider too. Why I'm not using this particular candle, because if I use this candle, then I'm getting a kind of a drawdown. This is like a resistant line now. Everybody, this is like a resistance. This is like a support over here. This is like a support here. Support, right? Okay. Change it to CN. All right. So this is like a support, right? Support here. Market came down here. Support rejected, then went down. So this candle here, it's I'm not going to consider this candle that much. So it's this last candle here, this one here, and this one. The first one, remember you always put it at the body of the candle or the wick. Then this one to the body and the wick. So you can see how price rejected this first one here. Came back here, mitigated off this point. This point here. This point here, mitigated off this point. Then price went up. So this candle before this uprise here is also another candle of interest, like this candle here, this particular one here too. It's another candle of interest. Let me remove it so you're going to see. Now you can see how price came to this candle, this red candle that went the opposite direction. Remember, as they are going the opposite direction, what is their aim? They want to close off their previous position. That is this particular candle here. That is why this candle came down and rejected, because of what? This particular candle. So that is how they move the market. So they move the market down, push it down, then the market rejects. You'll be seeing the rejection week. You'll be wondering, oh, this place is a support. They are actually mitigating off their sell position they had here. That is why the candle just came down and immediately they mitigated off this particular candle here. What happened? They pushed the market up, right? Now, this candle also is another candle of interest. I'll put a line there. They will come back there, you see, reject off again. So if they've closed off this position, they can push this market down to this point. This position is still open. This particular last candle here is still open. They can now push it down here, all right, before pushing it back up. So that is how they distribute price. That is how they move the market. So all these points, these are what I'm watching out for. Before that big move, I'm always watching out for that candle before that big move. I want to see two things it's actually doing. Is it actually clearing the previous low, or there's a question. Is it clearing the previous low? Is it activating some buy stops and all that? Just hold on. There's a question here. When you say the candle is still open, what do you mean? All right, what I mean by the candle is still open is that, remember that they had to push this market down just for them to push it up. So it's like they are hedging. They are hedging. All right, they sell to buy. Once they push this market down, this position is still open. Like they still have this trade running on loss. So they have to come back to the open. Remember, this is the sell candle. The transaction started right off at the body, the top here. This is where for the sell, the transaction started here, sell. This is the open price. This is the close. This is the open price. This is the close. So this is where they usually come to the open of that candle. They come here to close off at break even. So do you get? That is what I mean by open. Like this candle that came down here went back up. These positions are still open on their trades. Like they are still having a drawdown on this trade. That is why they come down here to close it off, then push it back off. So this one, they've closed off this one with this particular candle here. They've closed it off and they pushed it back up. Now, this particular one now is still open. This candle here that went down is still open. Do you get that? Right, let's hold up. Let me go to my chart again. All right. So that is why the same thing happened here. If you go back to the 1 hour time frame, the same thing happened. That candle that went the opposite direction means that they are in loss. That is what it means. Now, for this candle here that just went up to capture liquidity, to capture buy stops, stop losses, this candle here is their candle. So they are actually buying here, but they sold off here. So they have to come back here to close off this particular buy because it's still open. That is why they come to the open now. For this one, this is a buy. So the open is just down here, then they close it up. So they come right here at the beginning, this place here. This is where they come. That is why you put your line off that body of that candle that went the opposite direction. So they come to that particular place, then close off their position. That is the sniper entry. So you see the line right here. Now, they've closed off their position. Now they can move the price away. You see? They close off their position. Now they can move the price away. The same thing here too. Now, something like here, this candle now, this first one, this one is quite a small candle. So each time they come to this candle that goes the opposite direction, you always see a rejection in the market. The market goes up. It might give you 5 to 10 pips, but they still have things to consider. Like, do they have other positions open below? They can come down here and actually do what? Close off their position, move it back up. But remember, they still have a position below here. They have a position on this AUD card. They still have a position here, which is this particular one here, this candle here. If you go to the 4 hour time frame, if you want this candle to all look as one, this is the last candle that went the opposite direction before it went back up. So this is another open position. So now, if they've closed off this one, their next target now is where? Right here. So now expect the market to either continue going up or come down to this place. This will be my next sniper entry point. This point, 88,700. Then off. I'm already in this trade. Like I took about, but the way the price is just being sluggish at this point. About 20 pips in this market this morning. But market is quite sluggish here. I don't know what wants to happen. They've closed off this position. Who knows if they are targeting this particular candle here. So they can do anything. Like if they have multiple positions and they close them one after the other, they can continue pushing the market down just to close off all their positions before they move the market to wherever they want it to go. All right. So the next question, imbalance field. Kindly talk about that ending the call. All right. I'm going to. All right. So a previous level is always an open position. Yes, open position. So whenever the market goes the opposite direction and the next candle engulfs it and goes the other direction, the previous candle is open. Just like you enter your metaphor, like you want to place a trade, and the same time you place buy and the same time you place sell. Then the market starts selling. You are making profits. You are making profits. You are making profits. Then it gets to a particular level, you close it off. Then maybe you know that the market is going back up again. You now start buying. Whenever the market gets back to that your initial buy you opened at break even, you now close it, but you've made profits from the sell. I don't know if you get, but this one now, they have the money to move the market. Remember you yourself, if you hedge, you cannot move market. You cannot even move it by 1 pip. So if you like, go and do buy and sell. You can't move the market by 1 pip. All right. So let's go to the next. Let me see. There's something I saw on DXY. All right. So now on DXY, we have a kind of a manipulation here, right off here. You see? So this candle here that just came down here, then boom, goes back up. So I'm just expecting this market to come back here, fill this up, then continue going back up. So this kind of candle here is always manipulation in the market. For this thing to happen, some kind of big institutions are involved for this thing to happen. For this market to just go down, then the next hour is just going up to engulf the previous one. These are manipulation points. This is how I know that they are manipulating the market. All right. So NZD USD. This is very clear. This is very clear. This one happened like last week. The same thing happened again. You can see how they are moving price step by step. You can see how they are moving market step by step. So if I come to the 4 hour time frame, the FX box here. Oh, damn. I'm running out of time already. Okay. All right. Can you still see my screen? You can still see my screen. Can you just put a 1 on the chat box? Let me go through this one before I continue. Can you put a 1 on the chat box if you can see my screen? Oh, I think my network is off. All right, sorry guys, my network just went off and came back on. It just went off. So what was the last thing you heard? What was the last thing you heard before the network went off? I just want to go through one more pair, and maybe I can just show you a little bit on GJ. That happened like yesterday. GJ happened on GJ yesterday. Can you hear me? If you can hear me, can you just put the 1 on the chat box? If you can hear me, can you put a 1 on the chat box? Can you put a 1 on the chat? Hello? Yes, I know the screen is not showing. I know that. I know that. But if you can hear me, just put a 1 on the chat box so I can start sharing my screen. And what was the last thing you heard? All right, okay, all right. So let me go through this again. All right. What was the last thing you heard before? Okay, GJ. Okay, GJ. All right. Something like that happened on GJ yesterday. So if you I don't know what's happening here. But can you see my screen now? I don't know. Something just I can't share my browser again. But if you can see my screen now, can you just put the 1 on the chat box? Let's continue. I want to show you something like that on GJ. Most times when you see such manipulations, you just wait for the market to come back there. Can you see my? All right. So okay. All right. So let me go to GJ. Can you see if you can see my screen? Can you just put the 1 on the chat box, please? If you can see my screen, put a 1 on the chat box. USD card is going up. All right. All right. GBPJPY. I think someone is. All right. So GBPJPY. I don't know. This thing has cleaned my markup. I had a markup here, right here. Right. I had a markup right here. Okay, now this is how most times you are going to see this spike. This one was as a result of Brexit now, when Boris Johnson lost, something like this. So all these points here, this spike is just a fake out normally. So this is my candle of interest. This candle here, this particular buy candle. I'm not interested in this week because this. Who is there now? Who is there? Who is there? Someone's mic is. Oh, sorry about that. Let me mute the person. All right, we are good to go. Okay, so this candle here, this particular candle here, this is my what? Candle of interest. This buy candle here. This buy candle here. So remember, open and close, open and close. This is the candle, right? Let's change it to red. This is a red candle, GJ, because we know that this is actually a flame pattern. Sorry about that. Sorry about that. I don't know. All right. So back to GJ. I had a markup here, right? And we all know now. Everybody was seeing this whole thing, and like we are all seeing the divergence. You are seeing the rising wedge and all that in the market. What is wrong with this NEPA people now? Sorry about that. I don't know. The lights just they took the light. So all right. So back to what I was saying. All right, we are all seeing this whole pattern. You can see this reversal pattern right here, right? You can all see it. This is actually a reversal pattern with the whole divergence and everything. So all right. So what am I watching out for? Most times you can say this is actually breakout and retest of the trend line, then it's going out, it's going down, blah, blah, blah. Yes, I know all that. That is the advantage of knowing your basics. If you don't know your basics and you want to start trading smart money, it's not going to be easy for you because you have to understand all these whole things like, you know, market structure, reversal patterns, rising wedge and all that. You have to understand all this before you start trading smart money, believe me. So having that understanding of all these particular patterns, it gives me an edge. So I'm actually looking at the market the way you are looking at the market, but I want to be more precise. So this candle here, this candle that dropped down here, this candle, I'm interested in this candle because for this big drop to happen, something happened before it. So this is my candle here. This is my candle of interest. I come here, open and close, right? I put it right here. I put the line, just hold on. I put it at the body, at the candle, body, all right? You can see how, you can see a little drawdown. Remember your stop loss is always on top this particular one, right? So you can see the drawdown, just a little drawdown of how many pips. Then the market did what? What happened? We have that little drawdown of 15 pips, and the market dropped down, right? Like close to like 70 pips. Okay, now this one happened again, then this one came down. This candle also is candle of interest because if you're looking at this place here, this place is like a resistance, a small resistance, kind of like kind of a resistance. If you look at something like this place here, market is rejecting off here. These are equal highs now, right? These are equal highs, and there are people that would like to be trading this thing as a flag or whatever. I don't know, like continuation. The market is going up, it's correcting, then want to continue going up. Then people are placing buy stops here and all that. Then there are some people already selling here, all right? Then boom, takes them out, then drops down. So this candle is another candle too. I mark up this candle. Remember, open and close. This is a buy candle now. The market is going down. It closed up. Then what happened? So this is the open of the buy. So this is where I put my line at the body of this candle. So you can see the entries are just reject, goes down. You see? So that is how I get my entry. Most times you can get a drawdown, but remember that it's you are going to have a less drawdown. So you can see this one, the same thing, the same concept. Body, you put the line, that is where you put your what? That's where you put your sell limit. And the market comes here, activates it, gives you how many pips draw down, 10 pips draw down, boom, drops down to how many pips? 100 and something pips. So this one too that actually did this is another candle too I'm expecting the market to come to. But unfortunately, the market is not coming back there. So this is also another entry point for me. Because we know that GJ is actually going down. Like we know now it's on a downtrend now. Like it's about shifting down. So this is my next entry point on GJ. The next one after catching first one, second one. I still want to eat again. Like I'm hungry of tips.